Do you suffer from low credit scores? Or do you have no credit at all? Don't you worry, because this segment is just for you. If it's of interest to you, don't leave anywhere, and let's get ready and roll that intro. Hello, February, and welcome to another segment of Chat with the Monarch. Today we are tackling the uncomfortable topic of credit. Now, our expert of the day is here to tell you and I how to maintain it, how to fix it, or how not to destroy it. Elvira Trevino, welcome. How are you? It's a pleasure to have you with us.
I'm doing great, Rosaura. Thank you for inviting me to your show. I'm so excited to be here.
I thank you for blessing us with your presence. I know that this topic is a lot of information, but we're gonna tackle as much as we can. Elvira's company is actually named Renew Your Credit, and she helps us from everything from obtaining credit, right?
Okay.
And from fixing if somebody has low credit scores or no credit at all. Tell us a little bit about your company and yourself, and a lot about credit. How about that?
Great. So I have my credit repair agency just 10 minutes from East Downtown here in Houston, Texas. And so we are helping the community and helping them eliminate negative items off their credit report, helping them build credit, and also educating them about credit, because there's just so much information. So this is what we do.
Absolutely, so much information. Let's start with that. Elvira, educate us. What is credit?
Credit is your financial power with the ability to borrow money, but with the promise to pay back.
I see. So you're saying that credit is basically gives you the opportunity to, let's say, get a loan to buy a house or to buy a car for somebody that may not have the funds and they need to borrow that money. And you basically pay it as you go.
Exactly.
And I'm assuming that the better the credit score you have, the better your terms. Am I right?
That is correct, yes.
Great. Now, what if you don't have credit? How do we establish credit?
Well, this happens to a lot of people, especially the young ones, the ones that are like 18 years old, or a person who maybe have barely received their Social Security and they don't have no history. So what we recommend is that the client get a secure card. So what this is kind of like a credit card, but you're depositing your own money. You're using your own money. So you would need to put like $300 is the minimum. There is some that you can put $1,000, $1,500. Just depends on your financial status. So what you do is you use a card, making sure that you don't exceed, we always recommend 30%, and then you'll start making your monthly payments on this card, and then you'll start on your credit history, and a credit score will start appearing.
I actually like this idea because you're using your own funds.
Yes.
Which means if you go overboard, that's because you know you don't have the money. Don't
Yes.
go overboard, because that's exactly, I feel like, how the banks see you. They want to
Yes.
know what your financial health is, what your good habits, bad habits are, right?
That is correct. It's basically your credit history or your habits. So they want to see that you are a very disciplined person, a responsible person. So if you do have your credit cards really high, what is that telling the lenders when it's time for a personal loan? They're going to think about giving you that loan.
For sure, especially when you're trying to buy a house. That's the first thing that they see. They want to look at your credit and see your debt to income ratio. They want to
Yes.
know how many expenses you have that you're paying monthly, because in that difference on the ratio, that's your purchasing power.
Yes.
And that purchasing power, it's basically the budget that you have for your house.
Mm-hmm.
And credit is very, very important. What do you tell me about the people that do get credit, but they have co-signers or somebody has signed on their behalf? Have you come up with that situation? I know we have in real estate.
Yes. So it doesn't affect your credit score when you're signing for someone. The only problem is, say, if they stop paying on this home or vehicle, it will affect your credit score. And this is where you'll see that impact on your credit. Now, another thing, what I recommend, Rosaura, and is very good information, is that if you do plan to sign for someone, because sometimes they need that help, that push, say because you're trying to sign for your son or daughter who doesn't have any credit, let them pay, make payments for 6 months, 8 months, and have them refinance that vehicle in their own name. So that way they can start on their own credit. Because say you sign a vehicle for someone, for a friend or someone, and then in a year you want to purchase a home, like you just mentioned right now, the debt to income. Mm-hmm. So if you have that vehicle, you're not going to, and you don't make enough in the income, you might not qualify for that home. And this is what we do. Not only do we repair credit, but we are educating our people about this. So because whenever we put them on the program, we ask them, what is it that you want to do? What are your goals? Is it buying a car? Because buying a car and buying a home are very different goals. I mean, of course, they're different goals, but we need to see what we need to tackle and what type of advice we're going to give to our clients.
You're completely right about that. And it's very important to note, because most of the time we do it to help those around us, our family members, our friends, to obtain an asset that, they cannot qualify for at the moment. Mm-hmm. But do realize that this debt is still counting against you. And it's like we said earlier, if you're trying to buy a house and they're using that debt against you, then it lowers your purchasing power until that debt is out of your report. Mm-hmm. Keep that be mindful of that, because let's say that next year you want to buy something and then now you can't, right? So it's like she just said, I feel like yes, we want to help, but maybe it would be better if you send them to somebody that can help them fix their credit so that they can get that property or that vehicle on their own. And then you don't have to get a co-signer because you can do it by yourself, right?
Yes, that is correct. Now, you need to make sure that that person, has good habits as well, because it's easy to co-sign for someone and it's easy to receive that help. But sometimes people don't want to get helped, and they continue with those bad habits. So you're never going to be able to get out of that vehicle or anything else because they have bad habits.
And sometimes they may not even be a bad habit. Situations happen to, let's say that somebody loses their job and they can no longer pay this mortgage or this car or credit card, just a monthly payment, but you lose your job, you helped your friend, now your friend is or your friend, daughter, son, whatever, it's gonna be responsible for that. Yes. Do they have the funds to be able to pay for that? You don't know. So you don't wanna put somebody in a situation that they might face, higher risk later, because that will stay on both of their credit report, right?
Yes, it will.
What do you tell me about credit as in a marriage? Does that affect your spouse?
No, it doesn't affect you in no kind of way. If you're married, everyone has their own debt, whatever credit cards. Now, when you put them as a joint or as an authorized user, and there we go again, if they make a late payment or they let go of that account, yes, it will affect you in the future.
Okay, good to know. So just co-signers in general, anybody who you signed for. What about having too many credit cards? Sometimes, we can get a little happy and apply here, apply there, and all of a sudden you have 15 credit cards. Is that bad?
It does affect your credit score. We recommend for you to have 3 to 4 revolving credit, because you have to have mixed credit, installments and revolving credit. So if you have 4 credit cards and you have maybe 3, 4 installments, which maybe one can be a car, one can be a home, and maybe 2 personal loans, that would be okay. But when you have more and you exceed a lot of lines of credit, it could affect you in the future. Maybe if you're trying to open a business or something, there we go again with the debt to income, it could affect you.
What if you don't have any balance on them?
It's the same thing. Okay. Any unused, it could affect you in any kind of loan that you're trying to purchase.
So really, technically, is you do want to have some type of habits, because to get a loan, you just have to show them that you are able to repay. and then you can afford it. Am
Yes.
I right?
Yes, that is correct.
Interesting. So what about if you have a credit card, like I said, if you have many, but what if you start closing them? Let's say like that scenario that you have way too many credit cards and now all you want to do is close them because you're not even using them. Does that affect you when you close an account?
Yes, it does, Rosaura. So we recommend if you have a credit card, you need to see how old is that credit card. You don't want to just close it. You need to have a plan. And before closing any account, you always want to go to your credit report and, look at the time that you open, because sometimes you don't remember these things. And it's important that if you have a credit card for a very long history, you don't want to close that credit card. Maybe you want to see the recent ones, and I don't recommend to close them. Just pay off the balance and let them close by themselves. And if you want to reapply for it, you could all the time, especially if you have good credit. There shouldn't be any problems.
There shouldn't be a problem. It is my understanding that there's 3 credit bureaus. Is there a difference between the 3, or like a preference in bureaus, or do they report the same thing? I'm sure they report the same thing, but is there a difference?
You know what? That you said that they report the same thing. No, they don't.
They don't?
No.
Okay.
Of course, the national banks, like the big banks, they always report to all 3 credit bureaus. But there's other places like these little small loan places. I don't want to mention any names, but little loan places, people who have challenging credit. And they go to these little loan places. Sometimes they only report to 1 bureau or 2 bureaus, not all 3. Especially when you're gonna maybe vehicles. Some banks pull from 1 bureau. It could be TransUnion. Another one can pull from Equifax. Like I know Chase pulls TransUnion, maybe Bank of America pulls Equifax. And when you're purchasing a home, they always look at Experian. So everyone is different. So that's why we always educate our clients when they're gonna go get something. We make sure we tell them even where to go get qualified, because we already know, this place only reports to 1 bureau. Then you're gonna see on one report, you're gonna have a real high score, and then the other one could be 50 points difference. So we always recommend the clients where to go. A lot of people always want to go to the big stores.
Yeah.
Don't go to the big stores because you have to have excellent credit. You have to have like a 740 and above. We already know what places you can go, and they'll give you credit if you have challenging credit.
Challenging credit for someone that's probably starting off or trying to build their credit.
Starting off, or maybe like you said, in the past, there could be a lot of things, maybe someone lost their husband,
Yes.
Which was the head of the household. I've seen so many things, and it gets hard for them. It's not because they want to have bad credit, it's just the circumstances.
Great thing that you say there, because that is completely true, which comes to my next question. How do you dispute bad credit? So let's say, for instance, there are situations where you actually know that you got this credit card and know that you maxed it out, that you went over the max, and you know that you stopped paying, right? But then there's also a difference to where, let's say, it was identity theft. And has nothing to do with you. So in order to fix it, I'm sure there's different situations, and it depends on many aspects of probably the individual. But let's say, for example, those 2, identity theft and knowing that you maxed out your credit cards.
Okay.
But you can still dispute both.
Yes, definitely. Especially if it's identity theft. I mean, there's different ways that we can go about, but especially identity theft, for sure they're not going to find verification on these accounts, and so immediately they need to be removed off of the credit report. Majority of the time, the hard ones are the ones that, like you said, you maxed out a credit card. No matter what the circumstances, you maxed it out and you're not able to pay that account no more. You can dispute, by law, you can dispute these items to get them eliminated, and anybody can do it. We're always transparent. and honest, because a lot of people are like, oh, you could do that on your own. Yes, you can. There's a lot of things that we can do on our own. I'm sure I can change the oil, you can change the oil. I don't know how that's going to come out, Rosaura.
I don't think on my end it's going to come out very well, thank you very much, but I can try and I'm not going to. That is why we leave it to the experts.
Yes.
Because this is what you do for a living. And I'm very glad that you say that, because transparency in life is key.
Yes.
Yes, for our consumers, we offer these services, whether it be selling real estate or anything, you helping establish good credit or repair credit. But at the end of the day is, if you have your own job and you have all these things, you're a mom, all these things going on, sports, do you really want to take on the task of another thing in your to-do list, like fixed credit? No, that is why we take that weight off our shoulders, leave it to the experts that have done this for many years and help you. That's the assistance that you are able to serve to the clients, right?
Yes, that is correct. I did it I worked at an agency. I paid them to do the credit repair for me because, like you said, we live a busy life. You come from home at 6, 7 o'clock, cook dinner or whatever. You just want to get home and relax. And it's very time consuming, and you have to have a lot of patience. And so, like you said, go to the experts, someone who's doing it on a daily basis. It's very easy.
Because it comes out natural. And again, every situation is different. You've been there, done that, which you're able to assist. How about bankruptcy, which is a major topic in our industry? To obtain another home when there's a bankruptcy on your report, let me tell you, just to get the bankruptcy into the report, it's a process. Taking it off. Can you take it off is my first question. And then if you can, how long does it take? If it can.
Well, there is a solution for everything, but yes, you're right. It can take 7 to 10 years to come off your credit report, but we can remove it if it's been dismissed. If it's been dismissed or discharged, and we always ask the clients, has it been dismissed? If it hasn't, we can't help them. So, but if it has, we do. And then, having good habits is going to help. And with time, it will lessen, the amount that it's impacting their credit.
Absolutely. Now that you know that you can remove bankruptcy from your credit report, and speaking of mortgages, tell me, what about paying off your mortgage earlier?
Okay, so in some situations, when it comes to mortgage, they're a little bit different. Now, we would have to ask a lender, or because that's not my industry, but I know it can affect you in some kind of way. We don't recommend that when it comes to different accounts to pay off early, because remember, what's giving you credit, what's helping you increase your credit score is your payments, the length of the history of your payments. So we recommend for them to be on a 6-month, 8-month, or even up to a year, because the more length of your history, the better it is for your credit.
You're absolutely right, and I'm glad that you mentioned that, because yes, that is what you're trying to do to establish credit. So sometimes you want to create that position of yourself, financial health on your credit report that says, hey, I'm paying on time, I'm paying ahead. Yes, you're paying ahead, but also keep in mind, and we hear this a lot in real estate.
Okay.
There's a lot of loans, especially back in the years, where there will have clauses that said you cannot pay it off early, or there's a certain time where you're not able to pay off your debt of the mortgage.
Wow.
So keep in mind that depending on the loan that you obtain, there could have clauses and it can affect you if, let's say you want to pay it off and you're going to have to pay up front the credit that they were expecting from you. Very, very important. Now, what would you tell me of collection agencies collecting on old debt?
Okay, an old debt is likely to affect your credit report for 7 years, okay? So there is a statute of limitations which gives the debt collector a time to sue you, okay? After that time, they're not allowed to. But will they want to still collect? Will they still report it on your credit report?
I'm sure they will.
Yes, they will, because they want some money. But we are able to tackle those accounts and able to eliminate them from the credit report.
Interesting. And you know what's another question that I get a lot, especially when it comes to inquiries? Because if you're, let's say, trying to purchase a home and you try to get quotes from many different lenders, or let's say a car, how many inquiries are too many inquiries? Let's say that.
Well, we suggest that for you to only apply 3 times a year. I know that's a little bit because we like to apply everywhere. But what we tell the customers to prevent is going to dealerships. And a lot of people get confused and they're like, they only pulled my credit 1 time, from a dealership, that's it, But the thing is that what they don't know is that the dealership sends their application to many banks, especially if you have bad credit. They're trying to get you approved. So they're trying to apply at so many banks, and that's where you start seeing so many inquiries on your credit report, and it starts affecting you 5 to 7 points, on your credit report. But it all depends, Rosaura, on the person's credit. If you have good credit, it might not affect you. But if you don't have that much history, or you have bad credit, or it can affect you even up to 50 points. I had this one person who was trying to establish credit, and I told her to apply at for a secure credit card or something, and it dropped her credit score on one bureau about 30 points.
Wow, that's
she
huge.
Don't have, very huge. I was even in shock. There's many things that happen on a daily basis that we learn, and I was like, oh my God. But you know what? It's okay. It's part of the process. That's why we always tell the customer, try to get a secure card, do this and do that at the beginning of the process, and then we'll go from there.
Baby steps. Mm-hmm. Speaking of credit score, what is your minimum and maximum?
Well, the minimum credit score is 300 and the maximum is 850.
What's the lowest you've seen?
I've seen, this been years, I haven't seen that in a while. It was a 380. And that's because this person had late payments and he had a lot of inquiries. Like I said, if you go to 2-3 dealerships and they're pulling your credit about 20-30 times, that's what happens.
You're already letting them know, like, hey, I just want to get approved somewhere. Somebody approved me, and they're all going to say no, and this is why, because you're just applying everywhere.
Exactly.
They're not approving you.
And then with the high interest rate at the end.
Very interesting that you hit on the interest rates, because the higher your credit score, the lower it's like an inverse connection, right?
Right. So the better the interest rate, if you have a good credit history. I always say credit history. A lot of people get confused with credit scores, and a lot of people say, I want a high credit score. But you can have, I've had clients, I've had family members where I had to co-sign as well, or they had a high credit score, and they would be upset, and they're like, but they don't want to give me the car. It's because they don't have enough credit history. And at Renew Your Credit, this is what makes us different, is because we don't only repair their credit and increase their credit scores, but we educate them and we tell them, look, this is what you need to do. Even purchasing a home, when the client is like, I don't want to continue the program because I already have my home. And so this is where we go in and we're like, that 620 is not a good credit score, right? So this is where we come in and we educate them, and it's like, how about, having the power, of credit, that you have maybe an interest rate on this home, but I can tell you that in a year or 2 years from now, you can refinance to a better interest rate, So it's very important.
Point. Great. Excellent point. Because if you're we do have that, some of us have that mentality of saying, ya pa qué, ya lo tengo. But no, because if you bought it, but it's a high interest rate, why not take advantage? Like, let's say, for example, here in our market recently, 2 years ago, interest rates were down to like 2.2, I think I saw the lowest. Yes. Do you know how many people were able to refinance their home because they had good credit?
Yes. A lot of people were able to, but a lot of people were not able to.
Couldn't because of that mentality that said, I'm okay.
Yes, and another thing was what was sad during the pandemic, and they had that help for the businesses, a lot of them couldn't qualify because of their credit.
Credit.
Yes.
See, sometimes we don't see the what ifs.
Yes.
You know, think a little bit.
You don't know tomorrow.
Think ahead. Then, for example, what if something breaks down in your house and you don't have the funds? Some people are not, you know, some of us don't have the funds to just say, hey, I need a new roof. Roofs are expensive.
Yes.
Electrical, plumbing, everything in a household is expensive. So if you're buying this property and you're limited to funds monthly because you're paying on your home, you're paying on other bills, and all of a sudden you need to borrow a loan just to pay for a repair on your home, and you can't because you have bad credit.
Yes.
That's where you have to be financially smart. Learn to be financially smart for situations like these that we may not think we will encounter, but we can, right?
Yes. And so, as I mentioned, you know, when the customer is on the process, and, you know, I come from, as you know, Hispanic culture. It didn't matter what vehicle we were driving, as long as we had a new vehicle and it could be a high interest rate. It didn't matter. We looked nice.
It was nice.
Because it was nice. And
Estaba bien cute.
Yeah.
Y me miraba bien cute.
Yeah, what's my family going to say? But what they didn't know is the price they were paying. And so what we do when we see vehicles on a credit report, and usually Ally Financial is one of the that gives high interest rate. And I always ask them, I ask my customers while we're doing the analysis, how much interest rate are you paying that? Oh, I'm paying 12%, I'm paying 18%. Okay, great. So during the process, we see how they're going on their credit, and then we'll tell them, you know what, it's time now. How about you refinance your vehicle? This way, maybe they'll go 50% and you'll pay 6%. And you're gonna be saving about $50, $100 a month off of your car, you know?
And
so this is what we do.
Who doesn't love savings, everyone? Who doesn't? I know I love savings. Like they say, bueno, bonito y barato.
Así es.
How can you get it? With a good credit score.
That's right.
To me, I feel like it's all about leverage. You want to leverage as a business owner. You want to reinvest. You want to borrow capital so that you can, you know, continue to grow. We need to think smart, and we want to establish a good, healthy credit report.
Yes. Another thing I wanted to mention that you said, borrow money and open your own business. As a Latina, I was always raised like, you know, save your money, put it under the mattress. And then when you want to go purchase, you know, buy a home as an investment, you use all your money, your $50,000, $100,000. Let's be smart and use the bank money and not your own money. And that's what I always tell. Because I have a lot of business people. Don't think everybody, you know, there's no business people. I help everyone. And not everyone has bad credit. Some have phenomenal credit. And they're still in my program because they want to maintain it. There you go.
Yes.
They want to maintain good credit.
Speaking of business, but let's go to the other side of the spectrum. What about your credit affecting a job application? Does that happen?
It does happen, depending on what industry. You know, it could be a financial industry, then I would understand. But not a regular, if you're looking for a regular job. But it happens more in the financial industry and what type of employment. Maybe as a general manager, you know, they want to see if you're going to be the right asset for their company, you know, or are they going to be risking giving you this employment.
That's interesting, and you're right, because let's say, for example, if you're trying to apply for a job that requires you to assist in the biggest investment of somebody's, you know, assets. Let's say, for example, if you're my banker, how can I trust you with my finances when your credit or you're struggling financially, right?
Correct. That is correct.
Elvira, what would you say to somebody if they walk into your office? What are you expecting from them to come prepared with?
So what we recommend, usually most of the time they give us a call to the office, and, you know, we let them know that we have a free consultation. And so what this means is we want to know more about them. You know, do they happen to know what their credit scores? There's a lot of people that don't know what their scores are, don't know what to do. All they know is they're being denied. So we ask them, do you know your credit scores? Do you know what's affecting you on your credit? And what are your goals? Because every step of the credit process, It depends what they want. If they want a house, we need to help them, and we need to tell them, okay, you got to make sure you don't have no late payments within 6 months or 12 months. You got to make sure you're making your payments on time. On a vehicle, it's different. They might say, well, I want a car and I want a home. Don't buy the car yet. You need to buy your home first, and then you buy a vehicle. So we kind of want to know in this consultation what are their goals, and we tell them what we're going to do for them. And then after that, if they're interested, we do a credit analysis. We pull their credit bureaus. It's a consumer's report, Rosaura, because a lot of people are like, oh no, don't pull my credit. I don't want it to affect me. It's a consumer report. It just gives us an idea of what their situation is. And we want to know how we're going to help them and what they need to do on their part as well too. And then from there, we put them onto the program, and we have different options to help all our customers.
What do you say is the term to fix someone's credit, the length of time for them to be a little bit, for the credit score to go up? I know that it might depend, but what do you normally see within 3 months to a year?
It all depends. Everybody's different. They can have 2 accounts that it's affecting them. It could be in 45 days, or some accounts can be easier than others, and it can be in 45 days, or some can take about 6 months, 8 months, a year, because what if we're dealing with customers who have a credit score of 400 and they have a lot of accounts? And you got to remember, 400, when you think about it, these are people who probably have very challenging credit or very bad habits, and you have to because I have customers, even on the process, they still make bad decisions, and that's out of our control. And this is what we tell them: as long as you're doing your part, you will see a difference in your credit score.
But I'm assuming that in the consultation, and after you do the analysis and review of each individual person's report, then you do that plan of action. Mm-hmm. And just like you mentioned, when you do the plan of action, you've already told them, this is what we need and this is what I need from you. So just be consistent, yes. Be disciplined with what they tell you need to do to get to where you want to be. Mm-hmm. It's also good to be in contact with, let's say, your lender. If they're telling you that you need to be at a certain credit score, mm-hmm. that's when you come and you talk to the person that's helping you. Mm-hmm. How can I get here, right? So knowing where is it that you need to be, yes, from many different resources.
Correct. So one thing I know, a lot of people say, I want to be at this credit score, but you could be at that credit score, but there could be an account that's really affecting you. And if you're trying to buy a home, they're not going to want to qualify you because that account is affecting your credit score. So what I recommend all the clients, before they make any payment arrangements with these collection accounts, to come with the experts. Let us look over, review your credit situation, and we could probably save you money, because there's a lot of people who pay $10,000, $15,000. I've seen it, where they pay and they make arrangements with these collection agencies. And the sad part is, Rosaura, those accounts are not removed and they still remain on their credit report, and we still need to go and clean their credit report. So we definitely want to save people money.
Absolutely.
And so and you'll see in our social media where I say, we remove over $38,000. And the good thing that we save them money, we save them from making arrangements with these collection agencies.
So what you're saying is there's some accounts that even if you pay off, mm-hmm. they stay on your report.
Yes, they do. And they affect your credit score.
That is interesting, because there's people, like I said, that try to do this on their own. And the first thing that comes to mind, like I said, let's say that I did get that credit card. Let's say that I know I spent mm-hmm. the money.
Yes.
And now let's say that, I lost my job and I couldn't pay. All of a sudden, I'm like, you know what? I know that I paid it. I know that I used it, so let me go ahead and just pay it off so it can be out of collections, and mm-hmm. it'll be removed and my credit's gonna be all great and dandy. Then come to find out it's not.
It's not, and it's true.
And there's reasons why.
Right. So like I said, it's preferably is for them to come with us, and we'll let them know. And you know what? I'm not going to sit here and say we remove all the accounts. We always tell the clients, like I said, we're always transparent and honest, and we always tell them, you know what? We try to remove, all or some of the accounts. And at the end, if there's only 1, 2 accounts affecting you, then we tell them, you know what, it's time to make payment arrangements with these collection agents. But we saved them so much money already.
Has there been a situation where you couldn't help somebody because their credit was just too much?
So this is what happens. Yes, it's happened before, and it's happened way back. So sometimes we get excited, credit repair, and we want to sign people up. But now that I have my own agency, I look at the accounts, and I'm just like, sometimes they only have 1 account, and I'm like, I'm sorry, we can't help you. Because the thing is that they're going to be like, you told me you were going to remove this account, and it's not. I've learned through so much. So majority of the time, we just tell them, you know what, it's better if you make some kind of payment arrangement with them, and then we can probably clean your credit if you want to do that. But that was one situation. He only had 1 account, and it couldn't get removed. Yes.
But you knew and you told him. So transparency, like
yes,
I said,
and educating them as well.
Elvira, I can see how you love this topic so much, and I know that we can go hours and hours speaking of it, but tell me why you are so passionate about what you do and why you decided to open this repair company.
So I used to work at an agency before, and I was amazed how how people were reestablishing their credit situation. And it was, to me, it was new too. And I was like, are they doing something wrong? Are they doing something wrong?
Illegal?
Yeah, is there something illegal here? And I don't know. So what I did, Rosada, and I was like, in order to believe in this or believe in offering this to the clients, I need to do this for myself. So at 18, I had little accounts that were affecting me. I got into the program, and I would say in 6 months, because I didn't have a lot like that, everything was eliminated, and I started credit over again. And I started learning, and I was like, I've had bad credit for like 10 years. How come nobody told me this, And so when I was amazed, and I was like, I have to do this for my mom, my dad, my brothers, my cousins, my family. And they were surprised because they were never educated about this could be done. And so seeing people, how they were buying their homes, and I saw how happy they were, it would satisfy me. And so I decided to do my own business, and here I am. And what I love the most is educating the community, my Latino community, because like I said, nobody really, said much about credit, the way it should have been.
And it inspires me to see my clients and my guests just talk about the topic with so much passion, Elvira. I'm so happy that you were able to join us today. Before we leave, could you just enlighten somebody who's wanting to open a business in credit repair?
Oof. Well, credit repair is very competitive, but I do want to tell there's room for everyone all the time. What I do advise is for you to give it your all, be transparent with your client, and be there for your client, and be persistent.
Persistence is key, everybody. Now you know that credit is not as scary as it sounds. Elvira, thank you so much for being with us today and giving us a glimpse of your world. But not only that, thank you for giving us the opportunity to know and get ready to establish financial power with a good credit score.
That is correct. Rosada, thank you for the opportunity for being here and speaking and educating everyone. If anyone out there needs help with their credit or just understand it more, you can give us a call to my office. My team is always available during the week, and we are happy to assist anyone.
Thank you so much, Elvira. As always, her information will be down below. If you have any questions, like I said, always ask questions. Doesn't hurt. Everybody, her information will be on the screen. Call her, email her. Now, before we leave, don't you forget to like, share, subscribe, and turn on your notifications for the next Chat with the Monarch.